Good morning. Thanks for joining us. I'm Rashawn Dublin, Philip Capital's media host and presenter. Welcome to the Daily Morning Book. Local stocks ended Thursday in the red as traders approached markets cautiously. Notable factors that weighed on investor sentiment were inflation levels that could exceed forecasted levels, as well as a faster tapering by the U.S. Federal Reserve. The benchmark Straits Times Index fell 0.2% or 5.63 points to wrap Thursday's trading session at 3,221.52. The daily turnover came in at some 1.3 billion securities worth Singapore dollars 944.7 million. Decliners outpaced advancers 235 to 208. Next up, in Singapore, Daiwa House Logistics Trust, DHLT, a real estate investment trust, REIT, that will invest in logistics and industrial real estate assets across Asia on Thursday, November 25th, announced that the public offer of 25 million units to Singapore investors under its initial public offering, IPO, was 9.5 times subscribed. At the close of the offering on Wednesday, 7,543 valid applications for 237 million units were received for the Singapore public offer. The international placement tranche of over 219.4 million units at the offer price of Singapore dollars 0.80 apiece was 4.9 times subscribed. Next up, coffee shop and food court operator Kim Lee reported a 55.7% growth in net profit to Singapore dollars 39.3 million for the full year ended September 30, 2021. This comes on the back of an increase in revenue across the board, up 13.2% to Singapore dollars 238.6 million. The group said in a Morse filing on Thursday, November 25th. The group has proposed a final dividend of 0.84 Singapore cents per share and a special dividend of 0.6 Singapore cents per share. Taking into consideration the 0.56 Singapore cents per share interim dividend paid in July 2021, the total dividend declared for financial year 2021 stands at 2 Singapore cents per share. Moving on. Keppel Offshore and Marine, Keppel O&M, has been awarded work worth around Singapore dollars 200 million for the conversion of a floating storage and regasification unit and the integration of a floating production storage and an offloading vessel. Keppel Corporation said in a statement on Thursday, November 25th. For the first project, Keppel Shipyard, a wholly owned subsidiary of Keppel O&M, has signed a limited notice to proceed with a global provider of LNG, liquefied natural gas, shipping services to start works to convert an LNG carrier into a floating storage and regasification unit. The scope of the deal includes engineering work starting in Q4 2021. The full notice to proceed for the remainder of the work is expected within Q1 2022 when the project reaches final investment decision. For the second project, Keppel Shipyard has received a letter of award from VW Offshore, a fully owned subsidiary of the VW Group, for integration work on the new-build floating production storage and offloading vessel. The contract is expected to be signed by early 2022. Keppel Shipyard will be responsible for the integration of about 35,000 tons of topside modules and a turret, with additional options available to build new structures, such as a flare tower. Next up, in the U.S., the U.S. dollar slipped on Thursday, November 25th, but was still close to its highest since July 2020 against the euro, having strengthened due to market expectations that the U.S. Federal Reserve will raise rates sooner than other major central banks. Minutes from the Fed's November 2-3 meeting boosted the U.S. dollar on Wednesday as they indicated the Fed had become more concerned about rising inflation. Various policymakers said they would be open to speeding up the taper of their bond buying program if high inflation held and moved more quickly to raise interest rates. Data on Wednesday showed that U.S. jobless claims were at a 52-year low. Consumer spending increased more than expected in October, and inflation was rising. But on Thursday, the greenback's upward trend, which has seen it gain around 2.7% this month, paused slightly, with the dollar index down 0.1% at 96.707 and 1,242 GMT, compared to the 16-month high of 96.938 it reached late on Wednesday. Next up. Oil prices dipped in thin trading on Thursday, the U.S. Thanksgiving holiday, as investors eyed how major producers respond to the U.S.-led emergency oil release designed to cool the market, and with OPEC now expecting to release the swell of inventories. Brent crude futures had slipped 8 cents, or 0.1%, to U.S. dollars 82.17 a barrel by 1.02 p.m. ET, 1802 GMT. U.S. West Texas Intermediate WTI crude futures fell 36 cents, or 0.5%, to U.S. dollars 78.03 a barrel. OPEC expects the U.S. release to swell a surplus in oil markets by 1.1 million barrels per day, PPD, a source from the group said. The organization of the petroleum exporting countries, Russia and allies, together called OPEC Plus, will meet on December 1st or 2nd, or December 1st to 2nd, said policy. That's about it for me. I'm Rashawn Higwani.